Alright my friends, what's up? Alphonso here. So this is an update on gold. If you watch my previous video weekly analysis on gold, I said that gold will continue the bullish run. Today is Wednesday, 3rd April 2024. Last month right here, gold was forming this bearish channel right here. Last month when I gave the analysis on my daily time frame, I saw that gold is forming a bearish channel at this point right here when I gave the analysis. In my previous video, I said that if gold were to continue to the upside, it will have to come up right here and break this trend line. Break this trend line, then come for a retest, then continue to the upside. Bull run was very strong that we didn't even see a retest. The bullish momentum was very strong that we didn't even see a retest of this level. But if you go to a lower time frame like the 30-minute or 15-minute, you will see a retest. You will see a retest or something like a pullback for continuation. Gold is making an all-time high at this point of 2288. Gold is making a historic high of 2288 level. Even if we go to the weekly time frame right here, the price is still in a strong bullish momentum. Right here, we are forming higher highs, higher low, higher high, higher low, strong pullback, higher high, then another strong pullback, forming a flag pattern, which led to the bullish momentum to the upside. So gold is in a very strong bullish momentum right now, as you can see. Then price broke the flag pattern with a very strong momentum to the upside. I hope you got some profits from the past analysis. Essentially, gold has been buying because of different factors, like the US dollar was weakening and also the falling of the US bonds. This boosted the rise in prices of gold, and also the global geopolitical wars which has been happening. Investors consider gold as a safe haven, so they try investing in gold as much as they can. So gold has been bullish because the US dollar has been falling. As you can see, the dollar index, the DXY right here, this is the chart of the dollar index right here, as you can see. So the dollar index was weakening. So the dollar index just determines the strength of the dollar. It was weakening, then we can show right here it gained some strength right here, but still gold did not react to it. Gold just continued to buy. On the daily time frame, there was this resistance at this point right here, right here. So there was this resistance right here. So gold broke that resistance and went even further up. If I am to analyze this market right now, I am a day trader. I go to the 4-hour time frame right now. Like I'm in the 4-hour time frame, I look at my resistance zone, support zone, demand zone, and supply zones, or liquidity trap, smart money. Then I look for my entry. Like right now, right here, I can see there was a resistance at this point right here. This resistance, price came up and found a resistance, came up here, found a resistance, formed a pullback, then price broke our resistance, then formed a pullback. Now we are seeing a bullish continuation to the upside. The resistance was broken. Now we can see it is acting as a support. So if I go to my lower time frame, like the 1 hour right here, the 1 hour, price came right here. There was a fair value gap at this point right here. Price came with a long wick rejection right here. Price rejected this level because resistance became support. So if you took a buy at this point, you should be in profits. If I go to the lower time frame to look for my entries, 15-minute time frame, so I can see that gold came here, formed a pullback. This pullback ended with a long wick rejection. This red candle had a long wick rejection, and now we saw a bullish momentum to the upside. So you could have entered for a buy right there. You could have entered for a buy right here, then take profit at this key level right here. Then a stop loss at this point right here. Put your stop loss right there, then take profit at that point right there. So that is how you could have entered for a buy position. So that is how I took my trade. I did not target much. I did not put my take profit up here. I knew that there was a supply zone at this point right here. So this is a supply zone at this level right here. There's a supply zone at this point. So I knew that when gold reaches this supply zone, it will react. And you can see that it reacted to our supply zone with a long wick rejection to the downside. Gold is overbought, and we might see a reversal soon. There might be a reversal soon because price has been buying strongly, and there is a large fair value gap right here. If I go to even the daily time frame, there is a bigger fair value gap. These fair value gaps always act as magnets. Price tend to come back to these fair value gaps. The fair value gaps are just imbalance between buyers and sellers. So it is inefficiencies. Like right here, I can see a fair value gap right here. Gold needs to come and fill that fair value gap, and also there is a fair value gap right here. So at this point where gold is right now, I can't advise anybody to enter a buy position unless you're a scalper monitoring your trades on a lower time frame. But if you are a long-term trader, you shouldn't enter for a buy position right now, because we can expect a reversal, because the market is overbought. Gold is overbought. It has been buying for the last few weeks. For the past few weeks, it has been buying with a very strong momentum to the upside. We can wait for prices of gold to stabilize, then we look for a selling opportunity for a long term. So if you are a position trader, you can stay out of the market if you are not on a trade, and wait for a possible reversal. Be patient in the market, wait for your setup to play out, then you enter for a trade. So I wish you the best of luck in the market, and see you in the next video. And if you are new here, you subscribe to this channel for regular market analysis and forex education.